Welcome back to Investing Talk Podcast. Today we're taking a close look at TAL Education Group, ticker TAL. You shared some interesting information on this one, and our mission here is really to distill what's most important for listeners to understand right now.
Absolutely. We've got a fair bit to cover today to really get a handle on TL's current situation. Things like, company overviews, a look at recent performance, financial health.
Strengths, weaknesses too.
Yep. Strengths, potential red flags, market sentiment, how they stack up against competitors, and the future outlook. Plus, we have a detailed due diligence report from this year, 2025, and a very recent news update, April 11th, with the latest.
Great. So the goal for everyone learner is to get a quick but still thorough understanding without feeling, buried in details. We'll unpack TL's situation, hit those key financial points, the impact of those big regulatory changes in China. That seems crucial,
Definitely.
and maybe where they could be heading. So let's start with the basics. What exactly does TL Education Group do?
Okay, so TAL Education Group, they operate in China, and their main game is K-12 education. Their business model is, well, it's a blend. They've got the traditional brick-and-mortar learning centers.
The offline part.
Right, and they combine that with online education platforms. They offer things like enrichment learning, academic tutoring.
So extra help and getting ahead.
And a big part of their strategy is focusing on, teaching quality, using advanced content, and really integrating technology into how they teach.
Got it. Helping students learn both ways, in person and online. Okay, let's shift to the stock. How has it been doing lately? I saw there was some movement there.
There has been. So in the month leading up to early April 2025, TAL stock actually dipped by about, 10.95%. And this drop seems pretty clearly linked to those ongoing regulatory shifts in China's education sector.
Right, the regulations keep coming up.
They do. And if you look back over the last 6 months, or even the past year, the stock's been quite volatile. It's consistently reacting to these regulations and just the general market feeling about them. Though, it's worth noting, even with these headwinds, there have been moments of resilience, little rebounds here and there.
Okay, so China's regulations are a huge shadow here. But despite that recent dip in the stock, how are they doing financially? What's the health like?
Well, this is where it gets interesting. There's a bit of a contrast. In their latest report, Q3 of their fiscal 2025, that ended November 2024, net revenues shot up significantly. We're talking 62.4% higher, reaching $606.4 million.
Wow, that's quite a jump.
It is. And maybe even more encouraging, they reported actual net income of $23.1 million for that quarter.
Yeah.
It's a big turnaround from a net loss the previous year in the same period. And looking at the 9 months up to November 30, 2024, net revenues grew 54.6% to about $1.64 billion. They even managed an operating income of $12.9 million for that period. Plus, TL has a pretty hefty cash reserve, around $3.8 billion as of late November 24, and their debt-to-equity ratio seems manageable.
That definitely paints a more complex picture, doesn't it? Strong numbers financially, but that's stock volatility. So if we were to sum it up, what are the main strengths versus maybe some potential warning signs?
Good question. Tying it all together, key strengths definitely include their innovative use of AI in education. The due diligence report mentioned their AI-driven personalized learning stuff. That strong cash position is another big plus, gives them flexibility, room to invest.
Options for the future.
And their strategic push into international markets.
Yeah.
That could open up new growth avenues. On the other side, the red flags. Well, it's clearly those ongoing regulatory challenges in China. That uncertainty is definitely impacting investor confidence and, like we saw, the stock price.
Makes sense. That regulatory piece just looms large. How's the market feeling overall about TAL then, and who are they up against, competition-wise?
The general market sentiment seems, mixed is probably the best word. You've got optimism about growth potential from tech and going international.
The upside.
But then there's caution because of those regulatory unknowns hanging over them. Competition-wise, they compete with big games like New Oriental Education and Technology Group, Stride, others in that space.
Okay.
TAL's edge seems to be in its tech innovation and the range of services. But those regulations we keep talking about, they've definitely affected market share and profitability compared to some competitors. It was interesting, the due diligence report noted that while New Oriental faced similar pressures, their business might be a bit more diversified, like with overseas test prep, giving them maybe a slightly different buffer compared to TAL's strong K-12 domestic focus.
Interesting comparison. So, looking forward, what could really move the needle for TAL, either way? What are the potential catalysts and the big risks still ahead?
Yeah, thinking about the future. Potential positive triggers could be a successful launch of new online learning platforms
Yeah.
that could drive revenue and get users more engaged. And that international expansion, if it goes well, that's a huge opportunity.
Right.
But the major risk, and it's a big one, is still that regulatory environment in China. More changes could potentially hit their business model again, impact their profits. It's just an ongoing uncertainty.
Let's circle back to some of those financials you mentioned. Can you break down a few key metrics, maybe? Give us a bit more context on what they signal.
Let's try. So that Q3 fiscal 25 revenue growth, as we said, was strong, 62.4% year-on-year, up to $606.4 million. However, one source noted their pre-tax profit margin was relatively low, around 8.8%.
Okay, so growth, but maybe thinner margins.
Potentially something to watch. Their price-to-earnings, or PE ratio, is currently sitting around 39.02. For listeners, that suggests the market values TL at roughly 39 times its earnings per share. That's, higher than some peers.
Implying expectations for future growth, maybe, linked to that AI and expansion.
That could be part of the story, yes. Their return on equity, ROE, is about 5.15%. That measures how well they use shareholder money to make profit, and it's a bit lower than some competitors. Price-to-book ratio, comparing market cap to book value, is about 2.14. And interestingly, no dividend yield mentioned, 0% trailing and forward. So they aren't currently paying out profits directly to shareholders.
Okay, that gives us a clearer picture of the numbers. Thanks. Now, that April 11th news update you brought up, what were the key takeaways from that recent news?
So that update reinforced those strong Q3 results, the revenue jump, back to net income. Good news there. It also flagged that the next results, Q4 and the full fiscal year, are coming up soon, April 24th. So that's a key date.
Definitely one to watch.
The launch of new online platforms was mentioned again as a core strategy for revenue and engagement. There was also talk about possible strategic management shifts, maybe to improve operations, adapt better internationally.
Makes sense.
But the update also highlighted that stock volatility we discussed down about 12% in early April, concerns about maybe a revenue slump, and again, those regulatory pressures. Analyst views, according to the news, are still split. Some optimism on an AI-driven recovery.
Right.
Others are more cautious about margins and the competition. And finally, there was a little mention, a possibility of restrictions easing up in China's education sector. That could obviously be a big opportunity for companies like TAL if it happens.
A potential light at the end of the tunnel, maybe? So putting it all together, one of your sources gave a kind of summary recommendation. What was the bottom line from them?
Yes, pulling from that analysis, one source landed on a whole recommendation for TAL Education Group stock right now. The thinking behind it is really that balance we've been talking about. You got growth, potential tech, international expansion.
The positives.
But it's weighed against those significant regulatory risks, still very much present in China. The advice was basically keep a close eye on the upcoming earnings and any news on the regulatory front before making big moves.
So it really seems like TL Education Group is a complex story right now. You've got a company showing some really strong recent financials, looking ahead with tech, expanding.
Right, doing well operationally in many ways.
But then there's this huge cloud of regulatory uncertainty in China that you just can't ignore.
That tension is really the core of it, isn't it? The conflict between their internal operational success and this major external factor shaping their future. That earnings report on April 24th, it's going to be really telling, I think. It's a classic example, really, of how geopolitics and regulations can just dramatically impact a company, even one with strong fundamentals.
Absolutely. Well, we hope this breakdown has given everyone a clearer picture of the key things to think about with TAL Education Group. Definitely keep an eye on those regulatory updates out of China and that upcoming earnings call. If you found this helpful, please do subscribe, like, and maybe leave a comment. Let us know what other companies or market topics are you curious about. We'd love to hear from you.